All right, let's just dive right in. Imagine the year is 2025, and Bitcoin is just kind of hovering at a price that feels less like a financial metric and more like a cry for help. In this explainer, we're going to deconstruct the invisible walls that are holding its price captive. And you might be surprised to find out they aren't built on complex algorithms, but on something, well, something far more human. So let's start with a central puzzle here. Bitcoin is sitting at $111,000. Now, the question isn't just what's next, but more like why this specific kind of awkward price? I mean, just look at that number. It's visually unappealing, isn't it? It feels like it's begging for a market correction, or maybe just a really aggressive rounding error. This strange price is actually our entry point to understanding the real forces at play here. Okay, first let's look up. Every market has a ceiling, a point of resistance it really struggles to break through. But the reason for Bitcoin's current ceiling has way less to do with finance and a whole lot more to do with feelings. And that ceiling is $122,000. It's a nice, roundish number, but why that exact figure? Is there some secret calculation going on? Some long-lost financial ratio we all missed? Well, a traditional analyst might pull up some complex charts and start talking about something called Fibonacci retracements. That show you all these elegant lines and historical data to justify this exact price point. But the real reason? It's so much simpler and, frankly, a lot more believable. It's just good old-fashioned human impatience. So this breaks down the whole cycle perfectly. Just imagine you're an investor who bought in at just under the peak. Let's say $121,999. You've been sweating, just waiting to get your money back. The absolute second the price hits $122,000, what do? You're not aiming for profit, you're hitting that sell button, you're breaking even, and you're breathing a huge sigh of relief. And that collective sigh, well, that creates this massive wall of sales. And the result? You get a resistance level built on pure impatience that has, and I'm quoting here, the structural integrity of a damp napkin. So it's a wall, yes, but a very, very fragile and very human one. So if that's the ceiling, what about the floor? What's stopping the price from just completely crashing? This is where we run into the influencer safety net. Now, the crucial support level here is a mystical $98,500. And yep, it's another one of these very specific numbers. But this one isn't derived from trading volumes or moving averages or any of that stuff. You see, $98,500 is what's known as the psychological defense barrier. This is the exact price where influencers suddenly realize their laser eye profile picture is losing its ironic charm. They panic, and a flood of buy the dip and hodl posts just hits social media, creating this wave of confidence that props up the price. So, to be clear, the market floor isn't being held up by sophisticated trading tools. Nope. It's being supported by a digital army of hopefuls, armed with memes and a whole bunch of reassuring hashtags. But what if that's not enough? What happens if the collective power of all that influencer optimism just fails, and the price breaks right through that 98.5K floor? Is there a bottom of last resort? Oh yes, there is, and here it is. $69,420, the true, scientifically beloved bottom of the crypto market. So why this number? Well, because as our very serious technical chartists have determined, it's the only price that is both scientifically accurate and universally beloved. It's a floor built not on finance, but on a shared cultural joke. It is, quite simply, an unbreakable meme. Okay, so pulling all of this together, what does it all mean? Well, we're looking at a new reality for market analysis, one that has to balance all the traditional metrics with memes. And this slide lays it out perfectly. On the left side, you've got your old school textbook terms. On the right, you have the forces we've actually been talking about, raw human emotions like impatience and panic, and of course, the undeniable power of internet meme culture. And this brings us to the most important takeaway of all. Maybe, just maybe, in today's market, the most reliable indicators aren't based on economic fundamentals at all. Which leaves us with a final and pretty fascinating question to ponder. In a world that's so driven by digital communities and shared jokes, could the most powerful, most predictable force in finance actually be sheer, glorious internet meme culture? It's something to think about.